Hello and welcome to this Carbon Tracker Explainer. My name is Piotr and I'm part of the Communications and Events team. Today we're joined by Mike Coffin, head of the Oil, Gas and Mining team and author of the new report, Oil and Gas Transition Plans, a user guide. If you would like to download this report or any of our others, do check out our website, carbontracker.org, or use the QR code available on screen to download this specific user guide. Mike, thank you very much for joining this explainer. Can you take us through a little bit about what this guide is for and about?
Great. So really, this is a guide we've put out there. It's a fairly short piece. It's really going through some of the fundamentals of transition plans for oil and gas companies, and crucially, how financial market participants can use those transition plans that are being published and increasingly being mandated for companies to publish, and how those market participants can use them within their decision-making processes. Specifically, it challenges some of the misinformation out there regarding plans, and frankly, some of the guidance which is misguided in what it says that corporates should be doing. We see two distinct types of plan. There's plans to transition a business to reduce its climate-related financial risk exposure versus plans to reduce the climate impact of a business's activities. Now, these two things are important, but they are not necessarily the same. So it's critical that we assess them differently. And finally, what this does, it highlights the uniqueness of oil and gas, potentially in contrast to some demand sectors where decarbonisation is kind of more appropriate. And finally, supports investors with their engagement.
Very good. And so when keeping these factors in mind and the importance of considering transition plans, who exactly is this piece aimed at particularly?
Let's say it's aimed at, as it's a fundamental piece, it's aimed at actually a broad range of financial market participants, including portfolio managers, private markets, asset owners, and their managers, clearly, responsible investments, sustainability, stewardship, community, who may be more interested in that reducing the climate impact as opposed to the portfolio managers who perhaps more focused on that risk side. But then, of course, others too, banks, particularly say banks who have set net zero targets. How do they help assess? This can help them assess the transitions of the corporates within their lending portfolios, and others too, investor networks, guidance providers, but also critically, financial regulators and the policymaking community really understand actually what is unique about oil and gas and why and how it is different to some other sectors. But finally, it can help with the corporates themselves. It helps corporates understand the challenges that we hear from investors that have clearly fed into this note, and help the corporates become more transparent in their communications.
Indeed, very multidimensional. And I suppose the last thing that we would like to know is to understand what impact do you hope that this piece can have in stimulating more discussions? What impact do you hope it can have going forward in the basis of building more comprehensive initiatives?
Well, I think what we're looking at here is, as I say, it's a broad audience and it's a fundamental piece. So actually, it's bringing up a base level of knowledge across the board and really ensuring that these topics are kept separate and that the two types of transition are assessed separately. They can be use similar metrics, and some of the company strategies to deliver both may be common, but actually it's just ensuring that we are thinking through those two lenses and being ensured that the transitions that investors are assessing are actually the transition that they're looking to assess. So it's about increased adoption of sector appropriate assessments and metrics, specifically the need to focus on development plans and production for oil and gas producers. And currently, and somewhat perversely, we see almost too much focus on emissions ahead of these fundamental business activities, which continue to drive a negative impact on the climate, but also can increasingly expose investors to transition risk. Focus on these metrics ahead of more data, increase the engagement and support. The impact we hope to have here is supporting investors with their engagements with the corporates, again, on that transparency piece. Increased quantification of financial risk and thus better capital allocation. And then finally, really driving home that while oil and gas perhaps isn't as directly exposed to some of the physical risks of climate change as some other sectors, agriculture being one, but there are many others, climate change certainly does lead through to financial risk. And it's looking through that physical risk drives policy action, particularly on demand sectors, and those demand changes lead to transition risk from a technological substitution perspective onto the supply sectors of which oil and gas is core. So it's linking those different things through and being clear, irrespective of concerns about climate change from an investment perspective, actually there's a fundamental financial risk that it poses to the business, and therefore it's critical that climate-related risk is incorporated with all investment practices, like any other mainstream risk.
Mike Coffin, Head of Oil, Gas and Mining here at Carbon Tracker. Thank you very much. If you've enjoyed this video, please do consider giving it a like and always subscribe to our channel to ensure that you don't miss out on our future content and uploads. And as I said at the beginning, you can find this piece as well as many others on our website, carbontracker.org, or use the QR code to download this piece specifically. I'm Piotr. See you in our next video. Bye-bye.